New survey data for July has signalled another increase in overall business activity across Dubai's private sector economy, which has now marked 5.5 years of continuous expansion. At 53.1 in July, the seasonally adjusted Emirates NBD Dubai Business Activity Index posted above the 50.0 no-change value, as has been the case in each month since February 2010. However, the latest reading was down from 55.5 in June to signal that output growth was the slowest recorded for just under 3.5 years and only moderate overall. Construction remained the best performing broad area of activity in July, while travel and tourism and wholesale and retail saw only marginal rises in business activity. The tracker also showed that staff numbers rose across the Dubai private sector as a whole in July, which continued the upward trend seen in each month since January 2012. Although the rate of job creation eased since June, the latest expansion was still the second fastest seen over the past 5 months. As per the survey, private sector companies in Dubai retain a strong degree of positive sentiment towards the outlook for business activity over the year ahead, despite the level of confidence moderating from June's 19-month high. Average prices charged by Dubai private sector companies declined for the sixth month running in July, although the latest fall was only marginal and was the slowest seen over this period, with the survey showing that the rate of cost inflation remained subdued in comparison to the survey's long-run trend.
So the softening in activity in July is in line with other anecdotal reports and probably reflects the impact that a stronger dirham and lower oil prices may be having on private sector output and sentiment. Nonetheless, at 53.1, the headline number still suggests some relatively firm growth in the non-oil economy. And it is especially encouraging that despite the slowdown, firms in all 3 surveyed sectors remain extremely upbeat about future business activity.
As we head into the fourth quarter, we're already starting to see a rebound, for example, in the manufacturing sector of the UAE. And when we look at the output for the whole UAE rather than just Dubai, the reading was actually improved in July relative to June. So I think Dubai seems to be a little bit softer simply because of the importance of the services sector, which typically are weaker over the summer. So as we head into the end of the year, we would expect to see those start to rebound, trade start to pick up, tourism start to improve again, and that should hopefully be reflected in the PMI readings or the tracker readings as we get them later this year.
Dubai's Union Properties has reported a 96% slump in second quarter net profit on Sunday, as revenue from property management and home sales shrank. Union Properties, the developer behind Motor City, made a second quarter net profit of 19.37 million dirhams, down from 527.36 million dirhams in the corresponding period of 2014, according to a statement to Dubai's bourse. Income fell 64% to 317.9 million dirhams from 884.1 million dirhams in the year earlier period, while income from property management and sales dropped 59% to 19.7 million dirhams from 48.7 million dirhams. The developer's gain on the valuation of properties was 121.41 million dirhams in the second quarter, which compares with a gain of 711.57 million dirhams a year earlier. Union Properties' half-year net profit fell 93% to 47.52 million dirhams. A survey by the De Beer Group has found that Dubai is one of the top 5 destinations for young British expatriates seeking a new life abroad. According to the findings, almost 2/3 of Britons under 40 are considering quitting the UK, with 65% of those surveyed saying they are seriously considering, are thinking about, or would be tempted to move overseas. 22% said they would not consider leaving Britain and 13% did not know. The 5 most popular destinations are Dubai, New York, Cape Town, Sydney and Hong Kong. The survey, according to its authors, challenges the traditional perceptions of who emigrates from the UK, stating that often it is assumed that British expats are pensioners who relocate during retirement. But the survey found that there is a significant and growing number of the UK's working population who are considering moving abroad. A recent NatWest International Personal Banking Quality of Life report showed that Dubai ranks third in the table of nations offering the best quality of life for British expats, behind Australia and Canada. And homegrown brand Emirates Airlines has claimed the crown as this year's best brand in the UAE, beating electronics giant Samsung and mobile messaging service WhatsApp. Market research firm YouGov tracked over 400 brands in the UAE in the last 6 months and asked consumers if they have heard anything positive or negative about a brand in the last 2 weeks through advertising, news or word of mouth. Emirates Airlines garnered the highest buzz score of 56.7. According to YouGov, the company's high-profile sponsorships are the ones that are actually creating an impact among the residents in the UAE. The second most positively received brand among consumers in the UAE is WhatsApp, which earned an overall score of 51.3. Korean electronics powerhouse Samsung, which topped the 2014 rankings, slipped to the third place with a score of 44.1. Apple occupied the fourth spot in YouGov's brand rankings, followed by Google in the fifth place and Facebook in the sixth.